Bank of America, stock ticker BAC, is currently trading at $29.27 per share. And like most bank stocks over the past year, they are down quite a bit. You can see over the past year, down about 15.18%, and year to date, down almost 13%. You can see there was a huge sell-off right here in the month of March. Now, the good news about this sell-off is it does give the company a higher starting dividend yield. Current dividend yield currently sitting at about 3%. And over the past decade, the company's actually had a pretty good history of dividend growth. If we click on dividend growth here on Seeking Alpha, which by the way, you can get a 14-day free trial to at my link in the description. But if we scroll down, we can see over the past 3 years, dividend CAGR of around 7%, 5 years, almost 13%, and then 10 years, 36.22%. That is massive dividend growth over the past decade. Let's jump over to that dividend history tab and you'll see exactly why that's happened. In 2008, obviously, they pretty much cut their dividend completely, and they didn't pick up those dividend growth payments until around 2014. But when they did pick them back up, they have been increasing them rapidly, which has been great for shareholders. And this is actually a company that I own in my personal dividend portfolio. I've added more shares over the past few months. It currently makes up around 2% of my entire dividend portfolio. So in this video, we're going to be jumping into my bank valuation spreadsheet to see if we can find the intrinsic value of Bank of America and decide if it's a stock we should consider buying or selling. So let's go ahead and come up here and plug in the stock ticker. And if you'd like to be able to download the spreadsheet, then you can download it on my Patreon page at the link in the description. If we come right here and plug in BAC and hit enter, you can see all of this data will automatically load in. Now we're currently looking at a 500-day change chart, and you can see again the sell-off has been pretty dramatic. They were trading almost as high as $50 per share, and now they come down to around $29.27. Now, like I already mentioned, they have a dividend yield of around 3% with dividend payouts of around 88 cents per share. Payout ratio currently sitting at around 26%, so a nice low payout ratio, plenty of room to continue to grow that dividend over time. If we come right here, we can see analysts currently have a target price of around $36 per share, institutional ownership sitting at around 71%, and a beta of 1.37, so that's actually pretty high, so you will definitely see some volatility with this company. But let's go ahead and jump into our first valuation, which is going to be Graham's valuation. And this is a valuation model invented by Benjamin Graham to calculate intrinsic value, and here's the formula he lays out for us. So the first thing we need is our earnings per share, which we have listed right here. We then need to take our growth rate projection. I'm staying in line with analyst projections of around 4. We multiply that by 4.4, which is the average yield on AAA corporate bonds. And then we divide it all by Y, which is the current yield on AAA corporate bonds. And at the time of this video, it's sitting pretty high at around 4.65. That's quite a bit higher than it's been the past 3 or so years. And that is going to lower this valuation, but we still come to an intrinsic value of $34.56, which is a little bit higher than that current trading price. If we were to lower the current yield on AAA corporate bonds to where it was previously, maybe around 3.5, you can see that intrinsic value jumps up quite a bit to almost $46 per share. Let's go ahead and keep moving forward and look at our historical price to tangible book value. And I actually think this is a very important way to analyze bank stocks for a few different reasons, but basically it's a way to show you how the bank has traded historically compared to where it is now. So what we do is we take over the past decade the share price, which you can see I plugged in right here, and then we plug in the tangible book value during that time period as well. What that gives us is the historical price to tangible book value over the past decade, and we have it charted out right here. So you can see in the early 2010s, it looks like it was around 1.17, 1.19, 1.13, so it was trading in that range. But ever since around 2016, it's been trading at a little more of a premium. It jumped all the way up to around 1.65, and in 2020, it was even over 2. So ideally, if we can get this to a lower number, that means the bank is trading at a better value, and the current price to tangible value is sitting at 1.28, so that actually is quite a bit lower than it has been over the past 5, 6, or 7 years. So that is a good sign. It means the bank is trading at a better value compared to where it's been at historically. So again, I think you could make the argument that this means the company is trading at a decent value. And if we jump back over to Seeking Alpha, something that should definitely catch all of our eyes is if we click on valuation here and scroll down, you'll notice that the price to book value forward looking is sitting at 0.88, and the price to book value over the trailing 12 months is sitting at 0.93. Now, what does that mean? Well, according to Warren Buffett, anytime a bank is trading at a price to book value of below 1, he considers it to be at a good value. And this is actually a company that Warren Buffett owns in his portfolio. So to me, that's definitely something you should take note of. But jumping back over to our spreadsheet, let's keep moving forward with our valuations. We'll go ahead and look at our multiples valuation. I'll go ahead and zoom in, and you can see the 2 companies we're going to be using. And again, this is completely automated. So let's plug in JP Morgan and WFC. And you can see all of this data will load in for these companies. We're taking their stock price, dividing by the earnings per share to get that price to earnings multiple. We take the average price to earnings multiple, multiply by Bank of America's earnings per share, and we come to an intrinsic value of $37.24. Now, the last valuation model that we are going to be looking at is our dividend discount model. And this is a way to value a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the quarterly dividend payouts over the past few years, so we can see how much those dividends have increased. We have a 20% increase, 0, 16.67, and 4.76. So those dividend increases really have been kind of all over the place, but overall it's growing at a pretty good rate. That's an average growth rate of around 10.36. So moving forward, I'm projecting a dividend growth rate of around 6%, and with a discount rate of 9%, we come to a dividend discount model price per share of $31.09. So now that we have all four of our valuations, if we jump over to our output tab, I'll zoom out just a little bit, but you can see we have grams at 34.5, multiples at 37.2, and dividend discount model at 31.09. And then we also have our current price to tangible book value, and why that number isn't accounted for in our intrinsic value, we did come to the conclusion that it looked like compared to where the company's been historically, it seems to be trading at a pretty good value. So with these three valuations, we come to an intrinsic value of $34.30. With a 10% margin of safety, our acceptable buy price is sitting at around $30.87, and with a 20% margin of safety, our acceptable buy price is sitting at around $27.44. So whether you're using a 10% or 20% margin of safety, there really have been opportunities within just the past few months to buy in that price range. You can see the company has been trading as low as around $26 per share as recently as May. And again, that's part of the reasons that I actually have added a few shares of this company to my personal dividend portfolio within just the last few months. But there you go, there's a quick analysis on Bank of America stock. Go ahead and let me know what you think of this company in the comments down below. If you'd like to be able to download the spreadsheet, you can head over to my Patreon page at the link in the description. And again, Seeking Alpha is offering a 14-day free trial at my link in the description, so be sure to check that out if you're interested. But with that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.